Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. Well, folks, big news around FTX Celsius and customers being able to retrieve their funds after both companies, of course, have gone bankrupt. We know Sam Bankman-Fried is a scammer and a fraud, and he was running FTX in a very shady way. So the report headline reads, "Bankrupt FTX won't be restarting, but former customers will get money back in full." That's great news. One, that they're not trying to relaunch this exchange with this tarnished brand. And I've been saying that for years, even when the new CEO was like, oh, we're going to relaunch and all that. No, you're not. This brand is tarnished. Why would you want to do that? And customers, it looks like they're going to be able to get some of their money back. So an FTX lawyer said during a Wednesday hearing that plans for a relaunch of the exchange won't come to fruition. And here's a quote: "We currently anticipate that we will have sufficient funds to pay all allowed customer and creditor claims in full," FTX lawyer Andrew Tate, if I'm saying that right, told a judge on Wednesday during a hearing. Let's hope he's not lying. Let's hope this is true. And many of the folks who lost their funds and could not access it can recoup them. This is great news, folks. And we can make this right and put it behind us and keep moving forward. And look, Sam Bankman-Fried, he's going to be sentenced in March. I think March 28 is the day. So he needs to go to jail as well. And the industry can move forward. But I think customers getting their funds back would be really great because it's about the customers. It's not about the politicians. It's not about Sam Bankman-Fried specifically, but the people who were affected, of course. Now, we have a big update around Celsius as well, which was led by scammer Alex Mashinsky. Here's the headline: "Celsius to distribute $3 billion in crypto to creditors as firm emerges from bankruptcy. The distribution will be made through PayPal and Coinbase." That's interesting that PayPal is involved. "Apart from cash, creditors will get a stake in the newly formed Ionic Digital Incorporated mining operation," the company said in a statement on Wednesday. About 98% of Celsius Network's creditors signed off on the plan after 18 months in bankruptcy court. Ionic is expected to become a publicly traded company once it clears approvals. Here's a quote: "When we were appointed in June 2022, everyone assumed Celsius would disappear completely like the other crypto lenders that were filing bankruptcy around the same time," said David Barse and Alan Carr, members of the special board committee that steered the bankruptcy, in a statement. They said they managed to secure the platform's cryptocurrency, negotiate a deal with creditors, reorganize the part of the company that could continue and settle cases with the U.S. Department of Justice, the SEC, and the CFTC. Matt Prusak, the chief commercial officer of Hut 8, the company managing Ionic's mining, has been named Ionic's CEO. In a separate filing, the firm said PayPal and Coinbase will distribute the cryptocurrencies. Celsius will make no distributions through the debtor's mobile or web applications, which will be shut down on or around February 28th. Crypto lender Celsius bankruptcy process also saw it make a $4.7 billion settlement with U.S. authorities over fraud allegations. Former CEO Alex Mashinsky, who had resigned in September 2022, was arrested on fraud charges for allegedly manipulating the price of the lender's Cell token, an allegation he has denied. So folks, this is good news. Obviously a bad situation, but we want folks to be able to get their money back. And once again, we put this behind us and keep moving forward into the next bull market, which has already started, but there are different phases to this bull market. Here we got news that bankrupt lender Genesis settles with the SEC. Now, Genesis Trading is part of the digital currency group. They, of course, have a ton of capital that belongs to Gemini Earn customers. And with the Winklevoss twins and Genesis and these folks have been going back and forth. So here, bankrupt lender Genesis and the SEC reached a settlement on the Earn lawsuit filed by the SEC last year. In a filing with a bankruptcy court, the SEC disclosed that Genesis could pay $21 million as part of the settlement agreement. The amount depends on creditor repayment. The claim shall be subordinated to all other allowed administrative expenses, secured priority, and general unsecured claims as set forth in more detail in the settlement agreement. The most recent filing from Genesis seeks to approve its settlement with the regulatory agency. According to the filing, the settlement seeks to eliminate the risks, expenses, and uncertainty associated with protracted litigation against the SEC. The special committee, as well as the legal and financial advisors of Genesis, signed off on the settlement. So hopefully this situation with Genesis and Gemini can come to a full resolution. And once again, we can put this behind us and move forward. Now, we have some very interesting news coming out about Andrew Tate. Many of you may know him as a social media influencer. He's also a kickboxing champion and a businessman. Look, I'm not here to say I support him or I don't support him. That's not the point. What he did do today, though, was tweet out, "Hey, crypto Twitter, if I launch a coin and back it with $100 million of my own money and never sell, then I'll let university.com members get an early discount." And of course, he got roasted because he's a bit of a hypocrite here. Just about a year ago, and some folks screenshotted this, he said he would never, ever touch crypto and not get involved and all of that. Now he's trying to launch his own token. Now, since he was getting so much backlash, he took down the tweet. But folks, this is the definition of a shitcoin, right? He presents no clear use case, no solution. What is he trying to do? What's going on here? And he's saying he would never sell. I don't know about that. I've seen this story before, right, folks? If people are trying to launch a coin, there needs to be a clear use case. What are you doing? What are the tokenomics? What's the distribution? And there needs to be more transparency. So, like I said, he took down the tweet because he was getting destroyed in the comment section. Now, I don't know how many of you remember the SAB 121 rule by the SEC, which the Government Accountability Office, known as GAO, highlighted as a problematic situation. And of course, the SEC was embarrassed by this. A lot of media headlines, a lot of folks were coming out and calling out the SEC about this. And this was back in Q4 of 2023. Well, we got members of Congress aligning and looking to shut down this rule. Here, Patrick McHenry said that there is bipartisan agreement. SAB 121 undermines consumer protection and leaves customers' digital assets vulnerable. I look forward to getting this measure across the finish line to overturn it. He said, thanks, Representative Mike Flood, Wiley Nickel, and Senator Lummis. So you have members of the House and the Senate collaborating here. And Mike Flood, who I've had on the podcast, he highlighted the following. Chair Gensler's SAB 121 has virtually blocked banks from serving as custodians of digital assets. So they're going after Gary. They need to issue that subpoena for the FTX documents. But I think, I don't know if that's going to happen. I hope Patrick McHenry does this, folks, because we need this to happen. Now, quick word from our sponsor, and that is Uphold. Uphold is a great crypto platform. I've been using them since 2018. You can buy Bitcoin and all the top altcoins. In fact, they have 260 plus cryptocurrencies. They're available in over 150 countries. They have 37 fiat currencies that they support. And you can also trade precious metals such as gold, silver, platinum, palladium. They have a great platform, easy to use app. And best of all, folks, they are fully reserved. You can go review their transparency reports. They don't commingle or lend out your funds. So if you'd like to learn more about Uphold, please visit the link in the description. Now, Matt Hogan of Bitwise, who I've had on the podcast quite often, he tweeted out the following, which was very interesting, just showing the inflows that are coming into the Bitcoin ETF are historic. They've been going really well. So he said, Bitcoin ETF flows after the first 14 trading days, $1.7 billion. Gold ETF flows after the first 14 trading days, $1.3 billion. So Bitcoin winning right now, and it's very easy for capital to flow into Bitcoin, folks. And there's a demographic play here too, where the younger generation, they're not so much excited by gold as they are digital assets and crypto. So we're going to see more capital flow into these Bitcoin ETFs, especially as the bull market heats up. I've been telling you guys, we are in that macro bull market, and I'm expecting a blow off top in 2025. Now, speaking of ETFs, CoinShares ETH staking yield with ETP clients. So CoinShares is a crypto firm. They launched a Europe ETP. They call it exchange traded product there. And what's fascinating, and we've been talking a bit about it, will the Ethereum spot ETF be approved in the US, and how will they handle staking? Well, this could be a way that it can be done. Apparently, CoinShares is sharing the staking rewards to their clients. So Europe-focused investment firm to offer fund clients a 1.25% annual staking reward after slashing the ETP product fee to zero. Very fascinating, because if you have all those Ethereum or ETH, in a basket in the ETF, you could earn staking rewards. I'm not sure how they're executing this, but it sounds good, and it's promising for the Ethereum spot ETF approval here in the United States. Now, will SEC Gary Gensler put a roadblock? It's possible, because he refuses to state if Ethereum is a security or not before Congress. That in itself is a whole other conversation. But if they can get the staking component right here, looks like this thing can go live in the US, but we'll have to wait and see. So CoinShares is passing a portion of the staking rewards gained from its Ethereum exchange-traded product along to clients as part of a broader bid to bring more investors to the sector. Investors of the Europe-listed CoinShares physical Ethereum ETP will earn a 1.25% staking reward per year, the crypto-focused firm said Thursday. Such a reward is shared via an upward adjustment to the coin entitlement, the amount of underlying assets required to create and redeem the security. According to CoinShares product lead Townsend Lansing, traditionally the coin entitlement declines daily due to the management fee, Lansing told Blockworks. However, with our staking products, the management fee is reduced to 0%. The coin entitlement adjusts upward daily by the relevant staking reward, and the corresponding amount of coin is deposited into the issuer's account. Very fascinating. So this is great to hear, because it's not just ETH, but other proof of stake coins can benefit from this as these ETFs expand beyond Bitcoin, going to other altcoins. So great news, in my opinion, for proof of stake tokens. Now, speaking of tokens, Coreum, I do hold some Coreum tokens. We have a big update here from Bob Rass, who's the co-founder. He said Coreum's XRPL, the XRP ledger, cross-chain bridge functionality is about to go live soon, allowing all assets issued on either chain to flow between them. This will not only unlock a lot of potential for the XRPL assets to benefit from the smart token technology on Coreum, but also allow these assets to participate in the pools. I think Pulsera and Whelp DeFi Fund or DeFi Hub should create a great UI for this bridge, and then open new pools such as XRP/Coreum, XRP/USDC, Solo/Coreum, Solo/USDC, and Solo/XRP to allow users to benefit from the AMM and pool rewards on the Coreum networks. Great update. I obviously hold XRP, but I also hold some Coreum tokens. So looking forward to this update, folks. Anyway, that's the news. Let me know what you all think. Leave your thoughts and comments below. Hit the 5-star rating on the podcast platforms. Please, folks, don't forget to follow me on TikTok, Instagram, LinkedIn, Facebook, Twitter, X. It supports the podcast. It doesn't take $1 out of your pocket. I'm not asking you to pay for anything. I'm just asking you to subscribe and follow. Also, please subscribe to my free email newsletter on Substack. All the links are in the description. Thank you for watching and listening, and I'll talk to you all later.